Got 20 minutes, and we've got a lot to talk about. Very exciting time for the company and our shareholders, for the sector. We've seen this commodity finally have its day in the sun, at least to start. We've had a little bit of a pullback recently, but holding in there, the kind of low to mid-90s. I think there's still a lot left, a lot of runway. We're halfway from where we have been historically in inflation-adjusted terms. And we haven't yet seen the smaller and mid-cap names really play catch-up in terms of the equity valuations. And I think we're going to see that here as the cycle, the bull market matures. Now, at Skyharbour Resources, I think most of you are somewhat familiar with the company. We're a high-grade uranium exploration and early-stage development company. We have a prospect generator business as well. It's a multifaceted Athabasca Basin uranium story. We've been around for 10 years. Initially acquiring projects. We weren't as active with the exploration in the early days, really kind of kick-starting things in 2016 with our acquisition of Moore Lake and advancing and drilling that project. More recently, we've added a co-flagship advanced stage exploration project to the portfolio, Russell Lake. We've just commenced an 8,000-meter winter drill program combined of both of those projects. So this is a pivotal winter program for us as we're drilling 5,000 meters at Russell, 3,000 meters at Moore Lake. I'll talk a little bit more about that. We do have plans for an additional 8,000 to 10,000 meters of drilling at those two projects later this year through the summer and into the fall months. So it's going to be our biggest year of drilling at both of those two projects. First time we're co-advancing two co-flagship projects in our portfolio, but we also have the added benefit of this prospect generator business that we've built up. So we've got now 29 projects. We just added some more properties recently. We're the third largest mineral tenure holder in northern Saskatchewan behind Cameco and Atha, with over 1.45 million acres of mineral tenure. So a lot of the low-lying fruit's been plucked. It's not easy to go out and stake and acquire new projects. We've been aggressively doing so. We've built it up now to where it is. And as I mentioned, this prospect generator business has allowed us to create value at some of these secondary and tertiary projects without having to continuously raise money. We've signed option agreements with 7 different partner companies. Proud to say that 3 of them now have completed their earn-ins. They're officially JVs. Those 7 option agreements, assuming all the option partners and complete their earn-ins, would represent a combined 80 million, upwards of 80 million in project consideration. That's exploration funding, that's cash and shares coming into Skyharbour. Now, of the entire project portfolio this year, you're going to see work and drilling at about 6 or 7 of those projects. 2 of those, Russell and Moore Lake, and then the other handful or so projects are funded by the partner companies. So, very few other companies have that kind of robust exploration and discovery potential pipeline, and also have partners funding the majority of that work. So I won't spend a ton of time on management team. I think most people know, and we'll kind of move into what we're doing, but just as a quick refresh. So I've been running the company since 2013. I come from a finance and entrepreneurial background. We built and sold a gold company called Bayfield Ventures, which we sold to New Gold in 2013, 2014, and that's when my chairman, Jim Pettit, and I started Skyharbour Resources. Jim and I work together in Vancouver. Jim's been in the industry for well over 30 years. Dave Cates, who's the president and CEO of Denison Mines, joined as a director back in 2016 after we announced the Moore Lake acquisition. Dave, well known obviously in the industry, very large shareholder personally. Denison Mines is a strategic partner of ours. They're our largest corporate shareholder. We have a very close working relationship with Dave and his team at Denison. Joe Gallucci joined us just a few years ago. He's the managing director at Laurentian Bank now, brings a wealth of capital markets experience. Our geological team, headed up by Dave Biard in Saskatoon. Been looking for uranium in the basin for almost 40 years, ex-Cameco, credited with several discoveries. Him and Christine oversee all of the exploration and drilling that we're carrying out at our projects and help with the partners as well. More recently hired 2 new geologists, both coming from NextGen, Sean Cross and Dylan Drummond. And then we've got, rounding out the board, an advisory board, Paul Matizik as a strategic advisor, joined us in 2016. Paul's built and sold half a dozen mining companies in the last 15 years. That's really what we're working towards here at Skyharbour. Ultimately, we're looking at this as build it up, have exploration success, rising uranium price, and ultimately look for an exit through a sale or a merger. Andrew Ramcharan joined us as our corporate development manager just a few years ago, brings over 20 years of mining experience. He was the corp dev manager at IAMGOLD, and prior to that he was at SRK and Sprott. So a good mix of capital markets experience, a management team that knows how to build these companies, sell these companies, raise money, coupled with an exploration team, a geological team with focused expertise in the Athabasca Basin. Cap structure straightforward, 181 million shares issued and outstanding, trading around a $80 million market cap. We've obviously seen a bit of a pullback recently. I think we've bottomed here. We've seen these pullbacks in the past, and they've been met with, in the future, a new rising market and higher lows and higher highs. We're well funded with just under $9 million in the treasury. Important to note that we're fully funded for all of our exploration and drilling plans this year. And then again, we have the partner companies funding the bulk of the work at the handful of other projects that are going to see exploration and drilling carried out over the course of the year. You'll see some of our larger and strategic shareholders, management and insiders. We've continued to add to our position. I've been actively purchasing shares in the open market over the course of the last several years, especially on pullbacks. We have two notable strategics and corporate shareholders in Denison Mines and Rio Tinto. We're in all of the major uranium mining ETFs, and then you'll see some of the well-known institutional shareholders and funds that are again, well-known in this sector, that are shareholders of Skyharbour. Now, I know there's going to be a great panel coming up, so I'm not going to spend too much time on these slides. Just I'll note that we're very, very bullish at this point. I think the underlying fundamentals will continue to push this commodity higher. We've obviously seen a nice move from $50, $60 a pound to just under 100. But I think this is going to be, most importantly, I think this is going to be a sustained bull market. I think we're going to see a new norm. We're going to see a higher price with the supply deficit that we have now, 40, 50 million pounds a year. We just simply do not have near-term meaningful amount of new supply that can come on to plug that gap. I think we see a sustained rise in the uranium price, and I think we see it stay there for a number of years. Obviously, there's a renaissance, a resurgence with nuclear energy. It's the only source of baseload, emissions-free electricity generation that's affordable, reliable, scalable. We've seen the commitment, the pledge at COP28, over 20 countries that have signed a pledge to triple nuclear capacity. It's a part of their decarbonization objectives between now and 2050. So with the backdrop of a stressed supply side and a demand side that's durable, that's growing, we have the advent of SMRs and other advanced nuclear technologies. I think that this is going to be a very long, lucrative bull market in this commodity. Now, jumping ahead to the Athabasca, the map, this has just been updated as we announced additional staking earlier this week. Again, we now have the portfolio up to 29 projects, over 1.45 million acres, basically covering every subregion of the Athabasca Basin. You'll see most of our concentration, though, is in the southeastern quadrant, proximal to infrastructure, proximal to McArthur River, to Key Lake. Our two main assets, Russell and Moore Lake, you'll see there in the green and blue. As I mentioned, we've just commenced an 8,000-meter winter drill program, 5,000 meters currently underway at Russell, and then we're going to be moving the rig over to Moore Lake to drill 3,000 meters. You'll see a more zoomed-in map here. So again, just taking a step back, Russell and Moore Lake collectively just under 110,000 hectares of prime real estate, really in the heart of the Athabasca, and the eastern side of the Athabasca Basin. It's the bulk of the ground located between the McArthur River mine, the Key Lake mill. The road that services the mine runs right up through our property. This brings our drill costs down quite significantly. We can drive right from our office in Saskatoon to our exploration camp at Russell Lake. Our drill costs currently running at about $290 to $300 all in. That's everything, all in Canadian a meter, very competitive. In the bottom cost quartile of all exploration drilling in the Athabasca Basin. It's also shallow. Both of these projects are at Moore Lake, about 250 to 300 meters to the unconformity. The Maverick Zone, the high-grade Maverick Zone's at about 270 meters. So the exploration, the drill targets are relatively shallow, which is great. At Russell Lake, we're drilling to about 330 to 400 meters. This initial 5,000 meters that we've just commenced this winter program is focused on 3 target areas. One called the Fork target, which is very interesting as it's a target that's located underneath the power lines that run along the road. So it hasn't had great geophysical picks or targets on it, and as a result, the previous operators have not carried out a lot of drilling there. We finally have modeled the conductors. We had a good idea of where we needed to drill, and I can say already we're very, very pleased with what we're seeing at that new target. It's just to this kind of southwest of the Wheeler River, the M zone conductors on the Wheeler River project. We're also going to be testing the Grayling East zone, which again, as the name implies, is an extension of the Grayling conductive corridor, where there's widespread uranium mineralization at those conductors. And then we're also testing the M zone extension, which is a direct extension from the uraniferous fertile conductors on Denison's Wheeler River project, just up to the north from the Grayling target area. So no lack of targets on this project. It's a big property, strategically located, wedged in between McArthur River, Key Lake, and Denison's Wheeler River project. But we also have, just to the east and adjacent to Russell, our other co-flagship Moore Lake project. Now, this project we've been actively advancing since 2017. We've had drill results as high as 21% U3O8 over 1.5 meters, 6% over 6 meters. More recently, drilling a little bit deeper into the underlying basement rocks, we've intersected some of the highest grade zones of basement-hosted mineralization at the project, including 6.8% U3O8 over 2 meters. And again, this is relatively shallow mineralization between 250 to 300 meters. So a very exciting project for us to continue working on. We haven't done much work at Moore Lake in recent years. So with this 3,000 meter program, what we're planning to do is go right back in and infill an expansion drill the high-grade main Maverick zone. We're going to continue testing some of the basement targets underneath that main Maverick, high-grade Maverick zone. And then there's some regional targets as well, as there's still some very good discovery and blue sky potential at the project. So 8,000 meters underway, lots of news flow to come from this program over the course of the next few months. We're going to then start a summer program. Again, this will be between 8,000 to 10,000 meters. Again, fully funded for this, and that'll take us right through the summer months into the fall months at both Russell and Moore Lake. We're also working on a resource estimate at Moore Lake, and that's part and parcel with the infill and expansion drilling that we're doing at that high-grade Maverick zone. So a lot of news flow from our 2 main assets over the course of the year, fully funded for all the drilling. Great discovery potential at Russell Lake, and great discovery potential and resource expansion potential at Moore Lake. Now I'll skip ahead to our prospect generator business. Here's the snapshot of the various partnerships that we have. You'll see we've got now 3 joint ventures. We just formed our 3rd with ASX-listed Valor Resources the other week. So Orano, Azincourt, and Valor, the Preston, East Preston, and Hook Lake projects are all now joint ventures. All 3 of those companies are planning exploration or drill programs at some point this year. Azincourt just announced a 1,500 to 2,000 meter drill program, which we'll be participating in as a minority interest holder in the project. You'll see the other 4 companies, though, at the bottom: Basin, Madero, Tisdale, and North Shore. So these companies are still actively earning in, having to pay cash and shares, as well as fund the exploration to complete their earn-ins. Now, recent updates from these companies: North Shore and Tisdale both have announced drill programs, upcoming drill programs at their respective projects. Very, very excited for these 2 drill programs, as the South Falcon East project, which is going to be advanced and drilled by Tisdale, that is host to a small shallow deposit, the Fraser Lake Zone B deposit. So Tisdale is planning to go back in there and continuing to expand that deposit. It really hasn't been drilled much deeper than about 100 to 120 meters. We drilled a little bit in 2015. We were seeing the grade, the tenor of mineralization pick up below the deposit. So Tisdale is planning to go in and continue expanding that deposit, as well as looking for some higher grade mineralization at depth and along strike. They're going to be staging out of our camp at Russell Lake, both Tisdale and North Shore. That'll help bring the cost down. There's operational synergies there. And yeah, North Shore as well is planning 1,500 to 2,000 meter drill program tied in with the Tisdale program, and they'll be testing, I believe, 3 targets at the Falcon project. There's widespread mineralization at this property. It's all basement-hosted targets, shallow targets, and we're very excited for both of these companies to, in both cases, commence their inaugural drill programs at these respective projects. So all in all this year with these partner companies, it'll be our busiest year with our partners thus far. We've got programs from Orano, Azincourt, expecting Valor as well, Tisdale, North Shore, and we're also expecting later in the year possibly Basin in Madero, at Yurchison and Man Lake to carry out exploration programs there as well. So it's going to be a very, very busy year for us, for our partner companies. Great timing, obviously, with the market. And I'll just jump ahead here to the last slide, and then I'll hand it over to Dave for some questions. So recent milestones, upcoming catalysts. So like I said, we're busy right now with 8,000 meters underway at Russell and Moore Lake. It's important to note these projects are discovery ready, right? They're not earlier stage projects. We're going in there looking to make a big discovery, in particular at Russell Lake, where we have a pretty good idea now, given all the historical work of where we need to be drilling, what to be looking for. And as we've seen, there's nothing quite like a discovery, a high-grade deposit in the Athabasca Basin. And certainly with the uranium price where it is, it's a very exciting prospect to go in and ultimately have success and make a new discovery. So 8,000 meters started at Russell and Moore, resource estimate at Moore Lake later this year, and then we will continue drilling both projects again. As I mentioned, 8,000 to 10,000 meters that we're fully funded for, that we have in the budget for both of these projects for the remainder of the year. I just went through the partner companies, the 7 partner companies. We're expecting programs from most of them this year. So you're going to get exposure not just to the drilling and the exploration that we're carrying out at Russell and Moore Lake, but you're going to get exposure to 5 other projects possibly and drill programs throughout the year. If any one of these is successful, if any one hits a big deposit, big discovery hole, needless to say, that's a huge win for us and our shareholders as well, as we maintain equity in the company. We typically maintain a minority interest, and in some cases we'll also hold an NSR on those projects. Now, we are getting a lot of interest currently, inbound interest on new property deals. We've got a couple dozen other projects in the project portfolio that haven't been optioned or JV'd out yet. Needless to say, with the uranium price moving higher and the Athabasca Basin really being a top mining, development, and exploration district for uranium, we're getting a lot of inbound interest, and I suspect we'll have a couple announcements out this year, potentially on new option and JV partners. South Dufferin is a project we acquired last year that's drill ready. It's on trend of the Cameco Centennial deposit, shallow targets, and that and a few other drill ready projects that we have, I think we'll be able to sign some new option and JV agreements on. And then last but not least, the continued uranium market recovery. As I said earlier, I do believe that the smaller and mid-cap companies in this sector will start to catch up to the larger, more liquid names. We've seen that in previous cycles. I think just even this last pullback shows us that we're not quite yet. We haven't seen that kind of euphoria stage that we've seen in previous bull markets. So I still think there's a lot of runway. The underlying fundamentals are as compelling for this commodity as any out there. And again, I think it's going to be a great year for the company, for shareholders, and for investors in this sector. Thank you.